I feel kind of okay. I mean, this is not even your thing.
No, I see.
All right, how's everyone doing tonight? Good. Come on, give me a little louder than that.
Doing good.
You can't record on that, right? He's the real film guy here. All right, I'm not here to talk at all. I just wanted to introduce the moderator for our panel tonight, Mohammed Abdullah. He's a professor at USF, and he is our chief academic officer. So give it up for
Thank you, Chris. Thank you, everyone, for the time, for your time, and for your effort to be here. Just to give you a background, today's panel will be on the blockchain and real estate. We will discuss issues ranging from how investors currently, ordinary investors, should look at the blockchain as an interrupting technology for the real estate industry. We will also talk about the regulations, current status with the blockchain, and how blockchain is introducing new market opportunities for everyone and decentralizing and democratize the investment in real estate and open the opportunities for everyone to be here. So I would like to thank our guests here. I would give you the chance all to introduce yourself, the company that you're working with. I feel that you can speak better about yourself and the companies than I. So I'll leave it to you, Yvette, please.
Okay, cool. Hi guys. Is this thing on?
Mm-hmm. Yeah.
Okay,
Yes.
cool. Hi, I'm Yvette Romero. I'm engineering by undergraduate training, consultant. I work for Fannie Mae, and the reason I'm dropping that is going to become apparent in a second. And I also have my MBA, so I am partly technical, but I've also become very keen and attached to the business process and financial side of things. I'm the director of product for BitCasas, and we're tokenizing real estate mortgages in the US. So that means we're pulling mortgages and we're passing that interest income instead of to a bank, we're passing that to our investors.
Thank you, Yvette. That was good enough. I think I will ask you a lot of questions later on, so just keep some energy. Yes.
Hi, I'm Justin. I'm the founder of Z House. Just a quick background about myself. I was originally from Taiwan, moved to the US when I was 14, lived in New York, New Jersey for 20 years, and been here in the Bay Area for about 5 years. Most of my careers were focused on consulting. I was working in the ERP space, data integrations and analytics with Accenture before I started the company. Been here for about 5 years. Started the company in Z House a couple years, almost 2 years ago, with the goal of rationalizing residential properties. So the challenge we have with people who don't have 20% down payment to get a mortgage, someone with 5% and they want to buy a house, what do? There's very limited options. So while we're building a marketplace to connect those home buyers with investors who are going to purchase 95%, whether it's 1% or 95%, so they can help each other and achieve home ownership and lower the costs because now investor has ownership. We'll get into more how the whole thing works, but our vision is to achieve ownership and also help investors diversify in the liquid real estate marketplace with blockchain.
Well, thank you, Justin, and welcome to the Silicon Valley. We obviously need a lot of great thinkers and leaders like yourself and the rest of the panel. Thank you. Yeah.
Hey everyone, I'm Yev Spektor, the CTO of Slice Market. So I'll start off with a little background on myself. Originally born in Ukraine and came to the United States at a young age. Grew up in the Bay Area and came out of school as an engineer. Went to work for Lockheed Martin for a bit and then left to become a technology and software consultant in the startup world. And then going down that path, ended up in blockchain naturally. And I joined Slice at the very beginning of this year, around February. So with Slice, what we're doing is we are tokenizing commercial real estate investing with an emphasis on cross-border investments. So that means opening up real estate in prime US locations, so think New York, San Francisco, Los Angeles, opening that up to individuals abroad that would never have access to these kind of deals.
Great, and this is a great effort that everyone needs. I was talking to you before. Sometimes investment in such a stable market like the United States and investment in real estate in the United States is a big potential to a lot of people from different other countries because of the problems they're facing, being political problems, being corruption problems. So democratizing the investment in commercial real estate is an important thing. So thank you so much everyone for the efforts, for the great leading projects that you're working on. Now I would like to start asking Yvette. So Yvette, if I am a traditional, ordinary real estate investor, and you want to tell me about the current companies and the blockchain efforts that are changing and interrupting the real estate markets, how do you onboard me, telling me about the role of blockchain in the real estate? What is the problem that it's solving, and why do we need it at the very beginning?
Great question. Quite loaded.
Sorry.
So I think that we have a lot of logistical problems that we could talk about, like the fact that if you get a mortgage or you buy a house or you're going to close a deal with a bunch of LPs on either the residential or the commercial side, that you need to record titles and have, you know, county clerks and the state and, you know, kind of 5 different layers, and at the end of it, you're out 5%, right? And where did this go? Like, it's not going to go for refurbishing your house. It's not going to go to our operation or CapEx. So there's a lot of logistical connectors that are broken. And I've been in the mortgage industry from Fannie Mae, which is so old school, but it holds $3 trillion worth of mortgage debt. A large portion of that is reperforming, meaning that it went bad because there were these 80-20 deals, and now they came back, and half of it maybe reperformed again. The other half is washed off, right? Just money gone. But the logistics behind sort of getting a loan, and nobody wants the loan, everyone wants the home, is just so broken, and those logistical points are not going to change until they have a motivation to do so. And I think the motivators tend to be the investors and how people think about their homes. So I would think that for somebody that's a novice, you know, thinking about, am I moved by commercial real estate, or am I moved by residential real estate, and then further, you know, do I like debt or do I like equity? What I think a lot of people think about equity is the upside. If the market goes up, you will have a participation in the upside. But if the market goes down, you have a participation in the loss. Now, there's also only certain markets that are going to pay you income. Why? Because rent needs to cover all the costs and all the things that could go wrong, from the toilets to the air conditioning. I also founded a property management company, by the way, in Abu Dhabi. So I've been on every sort of side of the deal making operations, and then mortgages on residential in the US. But so I would think about kind of those two groups of real estate and really start to think about how those properties are valued. And then in big casas, we're taking that a step further and thinking equity is not the only bet you could take. Debt is another vehicle by which it's analogous to a bond. So you're getting these payments every month, and you have the best operator that you could possibly have in that home, which is the homeowner. And the homeowner has in their best interest to take care of that home and make sure that the equity value goes up. And all you're doing is collecting income. You get a diverse pool of, whether it's mortgages, then you're getting income, and you're reducing the risk that all of them go bad. If you put all your money and bought a $300 mortgage, for example, you got it all in one mortgage. So I think the operations, the logistical points, I think need to be incentivized and to move. But I think focusing on and knowing what kind of real estate you like and you research and you get to know very well, whether it's commercial, residential, whether it's debt or equity or other things too, is the other way to separate it. I would say operations is a big headache. And I think that even though a lot of the portfolios have a fiduciary duty to look after those properties, it doesn't really equate often to higher profit because it's not necessarily in their best interest to squeeze to the last dime like a homeowner would. I had one more point to add, but I can't think of it now. I'll add it later.
All right. Well, I was just amazed by the project in Betcasa that they switched really the view of investment in real estate from you thinking always as ordinarily that if you want to make money, you have to own a property or make a rental, to you can also gain money from putting like the idea that is analogous to bonds and where you can collect really.
Can I add the last point?
There you
Yeah.
go. See, I'm trying to help.
Diversification. So I think we all know this in equity, debt, whatever it is, diversify. So I'm not saying put it all in our debt. Don't. Go buy a little bit of equity, buy a little bit of their mortgage, buy a little bit of our debt, and diversify. So real estate type, debt, equity, where in what state it's in, if it's a high risk, high return, right? Because there's there's the good old risk return profile that you might want a San Francisco house and in a very high value market. Well, your return is like the sliver, right? You're making like 5 cents a month. Well, you might want to take another bet in a secondary city in Texas that might return you, in our books, even a solid bet will return you a cash on cash of about 25%. Cash on cash return. So diversifying the kind of plays, I think, is the other thing that you want to learn how that applies. It's one way to do it in equities, there's a different way to do it in real estate.
Thank you so much. So Justin, to you, I wanted to ask you, when we started the blockchain, one of the major benefits and promises that we always speak about is removing the middleman when we do a transaction. What's Z House's view on that?
Sure. Obviously, everybody's here for blockchain, right? Blockchain, I believe, is going to change and revolutionize how property is going to be transferred and how we can reduce or remove title insurance costs, the preliminary title fees and escrow fees, because now we finally have a technology that can build the trust and the security that most people and government hopefully is going to buy into this technology, right? So. But there's a long road ahead for us, right? The real estate has been very stagnant. In order to change real estate, you're dealing with, like Yvette was saying, you have country, you have state, you have county that have different rules. For example, I sold my own home. I put in the deed. I kind of print my name instead of signing. They got rejected. They're saying you didn't sign the title. I mean, we can't transfer ownership. So there's a lot of challenges ahead of us, but I truly believe that we are onto something, and that's why Z House is building the technology on top of Hyperledger, which is one of the blockchain network. And if you think about give you an example, if you think about credit report agency, it takes dozens of years to evolve into where they are today. And you have credit report agents everywhere that kind of sanctions how it's going to be used. That's how I see blockchain will be evolved in the next few years. Is you have an approved technology and government regulated technology that kind of says how the data should be accessed, who should be able to access this, and at what time, who needs to approve, and until we get there and kind of lead back to Z House, we're building a hybrid approach where we put the ownership on a trust, and we fractionalize the trust, and we put the fractional ownership of the trust on blockchain. So at this point now, people can actually trade the trust ownership without going to the government and file paperwork. And we kind of minimize the cost already, right? There's no middleman already for investors who want to help home buyers purchase their dream house. So for investors, they come in and buy 1% with zero cost, without worry about title, without changing ownership of the whole property. So that's why we're kind of embarking on this journey to kind of revolutionize real estate. Hopefully that answers your question.
You did. For you, Yev, one of the things that I was impressed reading about your project is fractional ownership of houses. So can you tell us more about fractional ownership and what's the role of blockchain? Like, why did we need blockchain to host in such a project idea?
Sure. So first I'll start with, how Slice sets up a property and how fractional ownership plays into that. So for each of our properties, we set up an SPV, which is a special purpose vehicle. So just think of that as its own company or LLC that is the legal owner of that property, right? And we usually set that up in the Cayman Islands. And when we issue the asset, we issue these tokens, and all of our token holders are LPs on the deal. An LP is limited partner. That means they own some share of that company that owns that property. So, the LPs, they typically don't have any voting rights, but, based on the share you have, that's how we decide, how do we distribute, operating income. If there's a liquidation event, how do we distribute those funds, things like that. And with blockchain, the real benefit here is we have a mechanism in place that reflects the token balances of all of our token holders in the Cayman entities. So legally, all of our token holders are LPs on the deal. So it's just way easier to manage the cap table. You can just go onto the smart contract of this token. You can see, okay, these are all the addresses that have our token and how much. So it's really easy to figure out, when we need to distribute the funds or anything like that. In addition, the other real benefit of blockchain is, is the liquidity. You can transfer these tokens. And this is probably an issue we'll touch on a little bit later, but all of the users that go through our platform will go through a pretty strict KYC, which is Know Your Customer Compliance, AML, anti-money laundering, and accreditation checks, to make sure they can legally invest and hold these assets. So even with all these transfers involved, having the blockchain and the smart contract that contains everyone's balances, it just makes it really easy to see what's going on with your property.
Great, thank you. Now, in terms for you, Justin, you mentioned that you're managing hosting the registries and putting it in a trust that's off-chain, and then you connected it to the blockchain just to prove the transaction. How is the government liking that?
Yes, so it's important to know that there are two parts of ownership, right, of real estate transaction. One is the conveyance, one is the recording. So if you want to convey your ownership from one person to another, you have the legal language of fee simple, grantor, grantee. You can convey the property ownership pretty easily on blockchain, however you want it, with a piece of paper. But government won't accept that, at least not right now, right? With all the different complexity we just talked about. So to record ownership, which is critical, because if you don't record, the next person comes in and record that, you're in big trouble. But that's the thing people are not thinking about, is recording is impossible on blockchain at this moment, right? So government, if you say I own or something on blockchain, they will be laughing at you. So what we're doing is we bring the trust, right, the legal trust, and then we present to the government saying, now this trust owns this property, right? And then we can deal with everything on the blockchain within the trust. So legally speaking, this trustee owns the property until government starts looking at this technology more closely and say, how does it work? Right? How can we really do something on blockchain? And if we're just trying to focus on trying to change ownership on blockchain today, we'll probably be out of business in a couple of years, right? But we are doing it within the regulatory framework. We're trying to make sure we have a real business case to help people fractionalize ownership, do it both hybrid approach.
Great. So, can I simplify it and tell me if I'm right or wrong? Give me honest feedback, you don't have to. So, what I'm understanding is that you're saying that you're keeping the government of doing their job and managing the records and managing and governance in general of all the real estate. However, you're just showing that we can have a blockchain that keeps a record of all the transactions so that it can be traced, it can be proven for the ownership of the property, etc., in terms of benefits of the blockchain, right?
Right, that definitely. So blockchain today, if you go to Z House, you're really invested in a real estate ownership, you buy 1%, your ownership, fractional ownership will be recorded on the blockchain. And to change that, to sell that, you have to have the private key, right? So you have to, it's super secure, it's for transparency, it's for liquidity. And in the sense that people are really tokenizing ownership right today with a trust, and that's something government will have no problem with because we also changing the ownership on the trust too, and we do everything the right way. You sell something, you make $1,000, we file the paperwork for you. You have to report tax gain, capital gain, right?
Great. Thank you so much, Justin. Yvette, there was one point that I hope that you do not touch in before I ask you this question because it will burn it, which is you did a perfect job. So you mentioned that you will allow international investors, and I've seen in your website that you can allow anybody from anywhere to invest in those loans. Where's the government from that? How do they like it? And what are the obstacles and hurdles that you guys face in that sense?
So there's a little bit of feedback. Hello? Okay, cool. So we all know the difference between an ICO and an STO, right? Who knows what an STO is?
It's all right to say I don't.
Yeah, okay, cool. So STO is just a new sexy word for ICO by using security in front of it. So security, a token offering. And the biggest difference between an STO and ICO for us and why we're going with an STO is because now we're not just saying if you're willing to buy a token that has some utility, great, we'll sell it to you. But we're saying, you know what, we want to work with regulators, and the SEC kind of is seen globally as you know, the higher standard. And so we're issuing essentially what are unregistered but exempt securities, abiding by every rule of the SEC. So we're issuing a security token by using Regulation D and Regulation S. These are, you know, two regulations you guys will hear a lot of, and those allow us to sell to Regulation S. Under that, we can sell to international investors. So any investor, whether you're accredited or not, and as long as you're not a U.S. resident, we can sell you a token legally, completely legally. Regulation D allows us to sell to accredited investors in the U.S., but also to international investors, but there's a little bit more of a restriction there, and therefore people like Regulation S. But these are unregistered, exempt securities per the SEC. So they love that we're asking questions and we're following all the rules. And I think that there is no clear rule. Let's say if we compare it to an IPO, because IPO has so much history and there's so many companies that have gone through an IPO. And so right now the SEC, per what I heard the last conversation, is they had a mandate to put out clear regulations for all the security tokens by the summer. They missed that, so we're hoping they're going to do it by, you know, the end of this year, January 2019. But basically what we're doing is adhering to the highest standard. So if they say withholding period can be 30 days, we're saying fine, we'll do 60 days. You know, I'm a product person, and I did regulation for mortgage issuance, for Fannie Mae, for all the super interesting stuff, right? So I see people maybe not laughing as much when we're talking about regulations, but you know, all this stuff when you build the sausage factory in the back end correctly, and you're able to track and you get subpoenaed by the SEC, you should know and be able to tell them exactly why you did what you did, and where and what process did you choose the investor, did you KYC them, did you ask the questions, right? So I'm assuming today that I got a subpoena from the SEC. So if that happened, what would I have wished we built in the system? And from an operational perspective, that's the way we're treating it, and also from a compliance perspective.
Great. So my understanding was that under Regulation S, that as an American citizen, I don't have to be an accredited investor. So Yev was correcting me, saying that you have to be an accredited investor. Yev, do you have anything to add also on the Regulations S and D?
Yeah, so for to your question of U.S. investors participating in Reg S, so U.S. residents cannot participate in any securities filed under Regulation S. You know, the real trick when you're issuing, you know, securities for the same asset under Regulation D or Regulation S, you know, a lot of people will think, oh, this is, you know, the same security or the same token, but it's actually not. At least from the SEC's point of view, if you sell a security, let's say for one of our properties, we issue tokens in equity under Regulation S, you know, to someone in China or Russia, those tokens cannot legally come back to the United States. So you need a software mechanism on the blockchain to enforce that. You can't commingle tokens that were issued under Regulation D and Regulation S. And then, you know, that's really a huge challenge, you know, with issuing all these securities is, you know, keeping track of everyone's identity, you know, and status and country of residence, and really putting in all those restrictions, you know, in the smart contracts and on the blockchain.
Thank you.
And I think going back to Mohammed's initial question of like, well, why real estate on the blockchain? Well, the beauty of the blockchain is that we have now a third party that's completely devoid of our company and our executives that tracks that this person with this public key bought our token on this date. So now we're able to extract the data from the blockchain and show them when that person bought that token and that we tracked it, you know, upheld that there was no tradability, and then put some kind of mechanical mechanism by which we need to know about it, we need to sign off before that person, you know, transferred the ownership of that token. And for us, if it costs us, it's super easy. No one's going to pay money for a token and allow it to be transferred to them without us knowing about it, because they want the income. So if they don't come to us, you don't get the interest income. We're going to keep selling it to the first wallet. So it's, you know, a behavioral aspect about our token that we're going to know if it gets traded.
Thank you so much. So Justin, Yvette mentioned something about the use of stablecoins and the real estate. And one of the major concerns when you talk to anyone who does not have any strong background about the blockchain is that if I want to buy a house with Bitcoin or cryptocurrency, you know, I need at least 45 days to close the deal, and the process can be up to 6 months. And by then, Bitcoin can go from $20,000 to $6,000. I'm sorry for those of you who lost in that. So how do you like respond to the volatility of the using the cryptocurrency in the real estate market?
Yeah, let me take a step back, right? So at Z House, we want to accept cryptocurrency as well, right? But we encourage our investor to convert to fiat, because most of the sellers are not accepting cryptocurrency. So we have to convert at certain points. And the best way to do it is do it right away. But we are building the technology to help people kind of determine if they want to sell or what they want to keep the Bitcoin, because during the 30 days, we're going to have some volatilities, and what is the risk for you and what is the risk for the platform that if you lose money, and should the platform step in and become custodian and take the risk, because it goes both ways, right? Sometimes we can make money, sometimes we can lose money. So that's not something we're going to do right away, but we're looking to that possibility. But for now, we're asking the investors, really, there's not the best way if you want to use Bitcoin to invest. For example, Chinese investors, they cannot get money out of China, right? So a lot of them are looking to Bitcoin to buy Bitcoin locally and try to invest overseas. And that's a huge market for us, right? And we wanted we need to make sure your Bitcoin is clean too, and we have to work with the AML company to make sure it's clean, but we also recommend them to sell right away, so there's a guarantee that you can invest.
Right.
There are stable coins that you mentioned that are being developed, but we haven't seen the wide adoption of those yet. So especially if you buy real estate, the trail of the cryptocurrency is still so important that anything that's hard to trade, hard to not, it can be anonymous. We can take those money.
Thank you, Justin.
Sure.
Yev, also, I've seen on your website and slides that any investor can liquidate anytime. Although I know in real estate, and especially commercial real estate, it takes ages for you to liquidate any of the investments. So can you also tell us how it works? And do I liquidate only in fiat, or I can liquidate on a stable coin that you are issuing? Or tell us more about that economic model, please.
Yeah, that's a great question. So on the issue of liquidation, at first we'll likely have to engage in some market making to provide the liquidity for investors. But the goal is, once a security token standard has been established, that'll pave the way for compliant security token exchanges. And then, with there, you're going to have, a ton of market making services, a ton of bots that will be providing, all of this trading volume and, as a result, liquidity. So at first we're going to, help out and piggyback on that, but, down the road, we hope that this kind of field and industry will become much more mature and, get a lot more participants, something hopefully be a little bit closer to a normal exchange.
I see. So do you work with specific exchanges that I can liquidate and cash out my money and even exchange it into fiat straight away?
So we're not live and operational yet. Right now we're talking to I don't want to give any names there, but we're talking to a few companies that are really working hard to establish a security token standard. I'm sure you heard recently a venture capital fund called Spice VC just launched. I think that's the first security token on Open Finance. So we really hope they're successful, and we hope their product does well. But right now the real challenge is the market's really young and it's really immature. So it's tough to see exactly which security token standard will be prevalent and will win out. For technical reasons, to be listed on exchanges, you should be following with whatever standard that is, just so it's as easy as possible for the exchange to list you. You don't want to create extra work for them. So that's kind of what we're waiting on, is for the industry to mature and kind of figure itself out.
Great. Can I just switch a little and get into the technical field and ask you, which platform are you building on now?
So right now we're going into the Stellar and Ethereum platforms. Working with both to evaluate capabilities. But in terms of contributions, we do accept Ethereum and Bitcoin as well. We're not going to be on the Bitcoin blockchain, but we'll accept Bitcoin.
I see.
Yeah.
And how about Z-House?
Yes.
So we are also using Stellar for tokens, and we are actually using Hyperledger for property data. So we basically structure our property data, fractional ownership data on different blocks, as well as the personal information on a separate block. So you're kind of looking at a 3-block Hype structure, and we pick Hyperledger because the flexibility and low cost and extensibility, and potentially in the future the customization we could do with the workflow and approval with working with government.
I know you're not into the technical field, might be,
I am.
or your job is in Bitcasa is not that technical, but like, can you tell us also?
Yeah, actually it is very technical. It's product.
I
manager.
apologize, guys. Falsify marketing.
So really at the nexus of product, technical, finance, and law. Why not?
I see.
So just Ethereum, we're Bitcasa's security token is ERC20, and we do take any most of the top cryptos and fiat to purchase into, and then when we pay the income, we're going to give an option for stable coins. And the reason we want stable coins is because those are already openly traded on exchanges. It doesn't lock you in. If we paid you in Bitcasas, you're locked in. Right, you could take your DAI, you could take your, your stable coin and sell it tomorrow and have hard cash.
Great. So what about the consensus models that you use in order to verify the information at Z-House system?
Right now it's a private chain, so there's really no consensus, right? So we kind of control the approval process. But again, we're hoping we can build on top of this, right? So we have the public starting to understand how how blockchain could actually be used to transfer ownership, working with partners, building out more public blockchains as we kind of scale. And when we go into global countries, and we're looking to build multiple blockchain nodes as well.
Yev, as a CTO, what are the main pain points you're finding in terms of the technical? Is it the human capital? Is it the knowledge? Is it the technology itself, maturity?
So there are a few aspects to the challenges. I think you brought up human capital. Right now it's quite difficult to find blockchain developers. And I've actually kind of taken a new approach to it where I have a team of just really talented more traditional developers React and Node and just the traditional JavaScript web technologies. So kind of how we ended up working is most of that's the work that usually takes up most of the time anyway. So I'll just block out parts for the blockchain components and blockchain functions. I'll just take care of those myself. And send that over to them. So yeah, human capital is a huge challenge, especially if you're doing something at the protocol level. It's going to be really tough to find talented developers there. I think beyond that, when you are working on a project that involves real estate or securities, even though you might be a tech person, you really need to learn the legal landscape inside and out. And for me, so if you talk to me in January, February, I don't know what regulation D, I don't know what the hell you're talking about. But pretty much became best friends with our compliance officer and our entire legal team. And that's really been the biggest challenge. Once you start learning about the SEC, why it has these certain consumer protections and these restrictions and these regulations, and you see, okay, yeah, that makes sense. And the next part of that is, okay, blockchain is, by default, blockchain is so open, it's so free, it's so unrestricted. And you kind of have to now put all of these legal restrictions in place, and it's not always trivial. For us, just having a really efficient way to tie in identity to the blockchain while still maintaining privacy for the user Especially with the GDPR standards now, like you have to be extra careful. Just figuring out how to deal with all these different regulations and implementing them into the technology. That's kind of a big challenge.
Thank you. For Z House, like in your model, the person who wants to purchase the house can put a little amount of money, then the investor will bring the rest of the money to help and support purchasing the house. From a tax perspective, how does this kind of partnership look like?
Sure. So IRS treats this as a share equity ownership. So the investor actually owns the rental property, and the buyer obviously is both the homeowners and a tenant at the same time. So he pays investor rent every month, and that obviously becomes the income of the investors. We file the proper tax form, and the capital gain when investor sells, I mentioned briefly earlier, is also filed with government and state taxes. So there are tax benefits, obviously, because now we're actually giving investor real ownership that's different from a debt or LLC interest or REIT. And one of the obviously the selling point I tell people is now you can actually do 1031 exchange. You can depreciate against your income because now you have a rental property ownership.
And I would like to conclude my questions, and then I'll open the space for the audience for Q&A. With you, Yvette, what does the blockchain and real estate future look like to you in 5 years?
Everybody in this room has Bitcasas in their pocket.
Good answer. Good
The end. I really want to see I think the institutional players have been very close to the coffin. There is this, kind of middleman syndrome that I need to be in on that deal. I don't want to give anybody information. And I think the blockchain really can push institutional and different players to be more open and see, everyday people as a partner, not just like a source of capital that I will go to if nothing else works. And crowdfunding within real estate has existed for a long time now, probably about 10 years, and it never really grew past about 3 billion. That's where it's at now. The players like Fundrise, Realty Mogul, and those guys. So, and there's a reason for that. Institutional players just don't want to go down the route of taking money from everybody. So I think that real estate on blockchain allows us to look at markets and just the way we buy an Apple stock to go long tech and to go long the